All righty. Our YouTube or whoever is watching this, welcome, welcome. My name is Kira Banks, and I'm about to introduce who I am interviewing today. But hey, welcome to this channel. We are here to inform, inspire, and connect you to the local market. Y'all already know me. I'm Kira Banks. And so we're just going to dive in on our talk today and where we are right now, current market, but this could help you even in future markets. I hope Nicole is going to tell us more. But anyways, I'm going to introduce Nicole to you. She could tell you a little bit more about her, but she is a lender. And fun fact, Nicole helped me and my husband when we decided to buy our first home. Y'all, we felt like we were absolutely poor and we would never be able to buy a house with what we made because we were not in real estate at that time. And I can't even remember how many years ago it was, but Nicole was our lender that helped us. And, you know, this was no fault of hers, but we ended up not buying that home because we had a loss on our taxes. And so we couldn't buy the home. So it didn't work out at that time, but we turned around. We knew exactly what to do. Nicole told us what we needed to do. We turned things around, and in really the next few months, we got approved again for a little bit higher, and it worked out. So for you people, if you are watching this, whoever you are, and you feel maybe discouraged, if you did, like if something didn't work in the past or got denied or wanted higher buying power, don't give up, right, Nicole? Do not give up, okay? So anyways, Nicole right now is working with GMFS, a lender, and we are going to talk about 2-to-1 buy down. I may not even be saying it right, but 2-to-1 buy down. We're going to go through a little bit of questions and educate you on what that is and a few other goodies. So Nicole, let's take this away. Can you please tell us even a little bit about yourself as a lender?
Well, I am a mortgage lender. I've been doing this for 26 years. I've been with GMFS for 9, love it. And it's all I know. So the market has changed over the years quite a bit. It will change again, but it's still a great time to buy. You know, prices are still increasing, property values are increasing. So it's a good time to buy now, so you'll have that equity in the future. Historically, these rates historically are not extremely high. They've just been extremely low in the last few years. So people see this as a high rate when in fact it's not out of the norm. I've seen it many times over the last 26 years. So.
Wow. And I love so much that you're saying that. So for all of those people who maybe this is your first home or second home buying, you haven't seen the market, right, in years past. So all you have is what you're seeing now to go off of. And you may have a friend, a cousin, a neighbor that's like, oh, stop, don't do it because of this. But you have to think differently. And me and Nicole, we talked about that before, and we're gonna even dive into that. So please explain a little bit, what is this 2-to-1 buy down stuff?
The 2-1 buy down is to give the buyer a lower payment for the first 2 years. And the way it works is the base rate, let's say it's 7%, is going to be your fixed rate. However, the first 2 years payment is based off of a rate 1% and 2% lower. So for instance, the first year, if your rate is locked in at 7%, the first year, you're going to pay a payment equal to what a 5% interest rate would be. The second year, you'll pay what a 6% interest rate would be. And the third year, you go with the 7% payment. So it allows the buyer to ease into that payment a little easier and basically have the effective rate for the first couple of years as they were, you know, a year ago. So it's not as much payment shock. And the seller, there is a fee for this because in essence, the difference in the payment is going to be calculated and paid. It has to be paid by the seller at this point. There may be an option in the future for the buyer to pay it. But basically the seller's paying that difference for you. And of course, you know, this Kira, seller paid costs are often negotiated in the purchase agreement. So it's not something unusual. And that's how it makes sense. So it allows that lower payment for the first 2 years.
Perfect. And even in that purchase agreement, side question, how have you seen that worded? So for those people that are buyers, you know, keep this in mind when you look at that contract, as you should before you sign it, what verbiage to look for.
Well, there is a form that we'll have filled out. What I've told my realtors and have had them do, if the buyer is not sure if they're going to go with the 2-1 buy down or not just yet, make sure that the seller paid closing costs, that you ask for enough seller paid closing costs, okay? Whether you want it just for the 2-1 buy down or you want it for the buy down plus additional costs. Ask for enough. We can always do the form and the amendment after the fact. For instance, if the buyer is going to pay for $8,000 towards closing costs, and that's in the initial purchase agreement, we can do the form and the amendment saying $5,000 is to go towards the 2-1 buy down, the other $3,000 towards the other cost. So it's an easy change if they're not sure, or if the buyer is new and really unaware of the product, and then I'll bring it up. It's something that, you know, the realtor, I would say, would need to know. Just make sure to collect enough to pay for that fee and any additional you might want, if that's going to be an option for that buyer.
And that's so good. And for buyers or agents that are watching this, the key thing is to talk to that lender.
Right.
And to find out how much do they need? Okay. How much do they need for a 2-1 buy down? Because can that be different, Nicole?
Yes. The 2-1 buy down, the fee for that is based on several factors: the loan product, the interest rate that they're locked in at, the loan amount is a big factor. The amount usually comes to, they're saying it averages about 2.1 to 2.3% of the loan amount. So on a $350,000 home, I believe it was about $7,200 on a $250,000 home. And this is with a minimal of 3 to 5% down. But on a $250,000 home, that fee was closer to about $4,800. So there's a lot of factors there. But of course, once a buyer's pre-approved, we can kind of estimate based on what their max purchase price is and give them the amount that would be needed.
I love it. I love it. Who is this 2-1 buy down good for? And maybe that answer is everyone, but maybe not.
The answer is everyone, actually, because the seller pays for it. So you have nothing to lose. Also, what I want to add, and I'll give you specific instances of who I really think can take advantage of it. But that money is put in an escrow account. And each month when you pay your mortgage, that additional from the escrow is added to the payment to make a full payment based off of, as in my example, a 7% rate. Okay. If someone sells their home, let's say in a year and a half, they haven't used up all those funds yet, because remember, there's 2 years that are placed in escrow. That money goes to that buyer or the seller that's selling the house. It's that person's money to keep because they didn't use all of it. And the sellers put that money in the escrow for that. So it's really to anyone's advantage. You're not going to lose anything by it. But particular situations, I think, is maybe someone that's expecting a promotion or a raise within the next few years. Maybe someone that just graduated college and they're getting started in their careers and they're going to move up. Someone that may be paying $1,500 a month right now in rent and doesn't feel comfortable jumping from $1,500 to maybe $1,800. Their first year can be $1,400 to $1,500 and then move up to that $1,800 gradually. That gives some people just a little comfort there. But I would say that's a lot. Or people that are going to be moving. Maybe this is their first home. They're not going to be there more than maybe 3 years, or they relocate often. Perfect for them.
Wow.
So, I mean, but like I said, really anyone, because the seller pays it, so you're not missing out.
And I love those scenarios. I hope that everyone heard that, okay? Because these are people that I know you're watching this, okay, and it's still possible for you. And then you mentioned something, when that money is held in escrow, if the person decides to sell within that year and a half, whatever money is left over, it's given back to the seller. Am I correct? Is that what you said?
The person that owns it, correct. Just like an escrow for insurance and taxes. Once it's paid off, they get a check for what that balance is. Same thing with this.
Wow. So that buyer bought the house, who is now a seller.
Selling the house, right. We get that money.
Oh, man. Yes. Okay. That's awesome. Not that you should sell your home in a year and a half, because it may not work out for you. You never know.
Or, I mean, even less than that. I mean, anytime during that 2 years, if there's any money left in the escrow, it's yours. You know? Wow. So that's great. Wow. And another option, or another time when it would be good for a person, is if they're going to refinance. I mean, let's face it, rates are not going to stay like this forever. It may be 2 years, it may be 5 years, but rates are going to come back down. So at that point, of course, we would look at refinancing to get that lower rate and get a permanent lower fixed payment. But this will help out in the first 2 years.
Yes. And so if everybody understood that in that third year, the goal would be to look at refinancing.
Absolutely. Depending on what rates are, absolutely refinancing.
And rule of thumb, Nicole, please tell us, when should someone refinance their home? What's a good scenario? I heard by a point. Like if
absolutely, I've heard that for 25 years, and I have to say I disagree.
Come on now, I love it.
Come on. If it's 1% difference, it's definitely a good time to refinance. So that's not it, but there's different situations. If you've got someone with a $400,000 loan and someone with a $200,000 loan, 0.5% may make a huge dollar amount difference on the 400,000 versus the 200. Okay.
I love it.
Another time it would be good to refinance is if, as you're paying on the home, your balance is going down and hopefully your property value is going up. So you're building equity. So even if it's not a 1 point difference, you may be able to refinance at 0.5% difference, get rid of the PMI that you were paying because you didn't put 20% down, and you're saving, in essence, more than you would on a 1% difference. So I like to look at it individually and determine that, because it is different for everyone's situation, depending on what they owe. Also, are they getting cash back with refinancing? So yes. There's just a lot of different, not everyone is the same. The 1% guideline is good. Definitely, if it's 1%, it's probably going to save you money no matter what. But there's a lot of instances where it will be less than 1% and can still save you hundreds of dollars a month.
And y'all, this is so good, because it's not just refinance, it's buying, it's what loan type. You don't go off of what happened to your friend. It's like everybody is case by case.
Right. I've had people within the last year saying how their friend bought a house and for $200,000, let's say, and we're paying such and such a month. And I said, well, when did they buy that house? They said 2017. You can't go off of 2017. You can't even go off of 3 months ago on what your payments could be compared to them. It depends on credit scores, down payment, current interest rates. There's so many factors.
And Nicole, something I always
compare.
It's so true. And I tell buyers, listen, I know they could be your friend, but they probably didn't tell you everything either. And then because some things they don't remember, what happened in the scenario. They're just celebrating because they got the house. Yeah. So we don't know. Sometimes they forget how much they put down or what their rate was or what their
exactly
loan type was. So we just don't know. Can we talk a little bit in closing about mindset in these rates? Because we were having a little talk about that before.
Right. It's like you said, it's a mindset. People have heard about these low interest rates for the past 2 years, especially younger people. I think they think that's the norm, and it's not. The 3% and 4%, even 5% rates were extremely low in history. I mean, there's been a few times in the last 26 years that I've seen that. Actually, I haven't probably seen the 3 or 3.5%, maybe one other time in 26 years. Wow. So the mindset is that everyone's so used to hearing those rates, they think 7% rate is high. in history, that's pretty much an average interest rate. Okay. So I think as time goes by, if rates don't change, people will change their mindset. They'll be accustomed to hearing that. It won't any longer be shock. It'll just be facts. And they're going to continue buying homes because property values are still increasing in most areas. If you wait 2 years to buy a house because of the rate, then you're missing out on that equity you could have built in 2 years. And if you buy in 2 years, even if the rate's the rate's lower, you may still be paying more for that house because the price of the house has increased. So now you're financing more. If you need a down payment, that's going to be more. And just buy now and refinance if those rates go down. That's what I say. Build that equity. You might refinance in 2 or 3 years at a lower rate and be able to either get rid of the PMI or lower that PMI. And you'll have that equity already built up. It's definitely better than renting for 2 years. Like I say, rent is 100% interest. So
that's right. That's right, Nicole. That's right. Y'all, and I talk about that 100% interest. When I ask renters,
absolutely,
how much interest are you paying? You're caught up off guard, like, wait, I'm not paying interest.
Right.
Right. Yes, you are. See your rent as you're just straight. It's not going to principal. It's going straight to interest. And it's not in your favor. It's in that landlord's favor, period. So get in that position to buy.
Yes.
And in closing, this is probably my second closing. But the greatest thing about Nicole that I love her is like, she works so hard. She's a go-getter. When she says she's going to do something, she does it. She doesn't play any games. I mean, like, period. Okay. So I encourage you all, if you're looking in Louisiana, Texas, at least that's where I'm licensed, Louisiana and Texas. Nicole, are you licensed anywhere else?
I am. Louisiana, Texas, Mississippi, Alabama, Florida, and Tennessee.
All right, y'all. So whoever is watching and maybe you're in those states, again, we're going to put this down in the description, all of her info to contact her, everything, how to apply, where she's licensed, all of that goody information. So you can even dig in and ask more questions. The years of experience are there. So you just got it. So I hope this was of great value. Thank you so much, Nicole.
I appreciate it. I appreciate the opportunity. And it's so great speaking with you as always.
Yes. So you all, whatever you need, let us know. And please, in the comments, chat below, like, I want to hear some questions, maybe more that y'all have about the 2-1 buy down, or just why it's important to buy. Just whatever questions you may have, put them there. We'll even link Nicole in so she can answer those questions. So thank you so much for watching. Hit that little cute bell thingy on there and subscribe and all that good stuff. So thanks so much for watching, and we'll be talking soon.